Hi, everyone, and welcome to The Hash, where we bring you the latest and greatest in crypto and culture. We are beginning another week, and to start off that week, we have Jen Sanasie, Will Foxley, Ben Powers, and myself, Naomi Brockwell. Welcome, everyone. Happy Monday. And let's just dive straight into it. I think some big news that we'll kick off with today is John Paulson talking about Bitcoin. It's always interesting when you have these thought leaders start to talk about what's going on with Bitcoin. Now, Paulson is a billionaire who made $20 billion shorting the housing market. And so he's very famous. A lot of people look to him for investment advice. And he just did an interview with Bloomberg where he says about Bitcoin that, let's scroll down here. He says, I think that cryptocurrencies are a bubble. I would describe them as a limited supply of nothing. He says he would not encourage anyone to invest in it. I have a lot of thoughts on that, but I'm going to kick it to the group to start off with. Jen, let's start off with you. What's your thought on what Paulson has to say here?
Yeah, well, I'm not going to say that. I mean, he's obviously a smart man. He's made a lot of money. He's done very well for himself. I think we've said this on the show before, you know, these figureheads, we really have to take what they say with a grain of salt. This is his opinion. But what was interesting to me is later in the interview, he was asked for some of the best investment advice he's ever had. And he said, invest in areas that you know well. Anyone can be lucky in a particular investment, but that's not a long-term strategy. If you invest in areas that you don't know, ultimately you're not going to do well. So the most important thing is to concentrate on particular areas that you know better than other people. And that's what gives you the advantage. So his comments about Bitcoin tell me he doesn't really understand the crypto space well, and he's staying away from it. And his advice to the readers of that interview was, you know what, if you understand crypto, what I'm taking away from that is you should just do what you're doing, and he can enjoy his billions of dollars.
For sure. Will, what are your thoughts on all this?
No, I think that's pretty prescient. I mean, there's a big world of financial markets out there. Why get involved with something that's so hard to understand like cryptocurrency? I mean, he has his own opinions and obviously is doing pretty well for himself. It's not like he needs the cash. He's not on hard times. I would say, though, that he is missing out on a lot of fun. I think like NFT summer, which nobody saw coming. It's kind of fun. You could be involved in that. So might be time to jump in just for that reason alone. Naomi, your thoughts?
Yeah, okay. I'm going to go back to something else he said in the interview because he seems real confused. Like, sure, he made a ton of money shorting the housing market, and that was really prescient. A lot of people called it, but he's someone who got the timing right, and that's hard to pull off. But let's see what he says about gold. So he's also famous for buying up a ton of gold. People refer to him as a gold bug. And they asked him, you know, do you think that gold is a good investment at this price? And he says, yes, we do. We believe that gold does very well in times of inflation. He explains why. The reason why gold goes parabolic is basically there's a very limited supply of investable gold. It's on the order of several $1 trillion, while the total amount of financial assets is closer to 200 trillion. So as inflation picks up, people try to get out of fixed income. They try to get out of cash. And the logical place to go is gold because the amount of money trying to move out of cash and fixed income dwarfs the amount of investable gold. The supply and demand imbalance causes gold to rise. And it's fascinating that he's talking about like the main reason to invest in gold is that there's a limited supply of it and people consider it as historically something that does well when we have inflation. He doesn't say people, you know, buy gold because at the end of the day, it's useful in circuits and it's useful for gold for tooth fillings and it's useful for all these things that if you use, you know, the regressive theory of value, you know, this thing that Peter Schiff touts is, you know, gold is valuable because it has this underlying use case. He's not explaining that that's why people are going into gold. There's a completely different reason why people are going to gold, and it's exactly the same reason why people are now going into Bitcoin. There is a fixed supply. People are considering it as something which will potentially do well in the case of inflation. You know, this idea of intrinsic value, I think people need to get off that idea because value, as we know, is subjective. There is no such thing as intrinsic value. Things have completely different value depending on whatever the contextual situation is. And so it's just, when I hear people tout this, but then they say the opposite because, you know, gold somehow is this incredibly different asset. It just kind of makes me shake my head. But I'm going to throw to you, Ben, for your thoughts.
I know. When you're talking about intrinsic value just being quite arbitrary, like rock NFTs, like what? It's like value only comes from the sense of
value.
Those, I mean, it's only what people are willing to pay for it. That's really the measure of anything valuable. And even like, subprime mortgages and housing crisis and all of that, like shows that there is no inherent value in any of this in a lot of different ways. Sort of my takeaway here, at least, is, Jen, I think you really hit the nail on the head coming off the top in terms of people staying away from what they don't know. And that's fine. But sort of writ large, like I just think like the more net worth like somebody has, the less we should really value exactly what their opinion is, because it's so, they can kind of say whatever they want. It's not directly going to impact them, right? Like people that are kind of chasing like crumbs of what people are saying or what investment advice they should have, I think really just need to look for their own research and stuff and not just follow the words of what other people are saying, because these guys can just kind of like pop off and say whatever, and it's not going to matter to them down the line. But if you actually act, and put money behind what their words are when they might not do the same, then you're going to be the one that gets hurt at the end of the day. So that's sort of my overall takeaway on this one.
Yeah, I will say that, he's spot on when he's talking about this frothy market right now. He says that the area that's most mispriced today is credit. You have current inflation that's well in excess of long-term yields, and there's perception in the markets that this is transitory. I think they bought the federal line that it's just temporary due to the restart of the economy, and then it's eventually going to subside. He disagrees with that. I think that we all kind of disagree with that. And it's obvious that this is an augmentation in the market that's caused by government. So there are lots of areas that are frothy. Sure, crypto is one of them because people are trying to get their money out of cash. Houses are another one. There are lots of different areas of frothy markets at the moment. And it's just because the government keeps printing so much money. So yeah, he's spot on there. But I think that I disagree that, with his prediction that he doesn't see crypto as being that longer-term store of value. I think we're definitely seeing this as a new emerging asset class for that purpose. Let's change track. Let's go to you, Will. What's going on in China?
It's time to talk about China this morning, which is planning on building a clearing and settlement network for mobile payments using their digital yuan. According to an op-ed Monday in the People's Daily, rather. So the network will be a breakthrough point in the cross-border use of digital currency, the op-ed says. Basically, they want to internationalize the use of the yuan, which of course is a competitor with the dollar. So there's a whole conversation to unspool there. And then of course, there's like this conversation of what is the purpose of a CBDC and the purpose of cross-border payments with cryptocurrencies itself. And then for the final context there, you have Bitcoin mining being cracked down on, and even more, I'll call it propaganda, but maybe we shouldn't call it that. More comments from the central bank in China saying that cryptocurrencies are dangerous, and they're encouraging the use of their own CBDC, which has been rolled out across the country in multiple cities, still somewhat in a trial phase. But now they're looking to export it, which is a pretty big deal when you're talking about the dollar reserve status and how fiat currencies compete against each other. Naomi, your thoughts on this? Of course, we've had a lot of Chinese stories like Chinese money stories over the last few months. Like there's always a story about that. But this seems a little bit different in the sense that you now have them gunning for that dollar reserve status, and they're using cryptocurrency rails to do it. Is this just like a totalitarian nightmare when it comes with cryptocurrency? Is this like what we didn't want to see happen?
Well, yes, China in general is a totalitarian nightmare. It's not the only totalitarian nightmare in the world. But aside from that, it's very interesting because China has bet on the wrong horse here, right? Because there was a long patch of time where with different cryptocurrencies, people were saying, we're really worried about how much of this is mined in China. We're really worried that maybe the government could come over and, take over this and, embrace it. And then it would be this Chinese run thing. They could co-opt the system. They might have the ability to bring the system down, make it uncensorable. Like there was lots of fear around that simply because there was so much, hash power coming out of China. And then China turned around and fixed that issue for everyone by saying, we're kicking all of this out of the country. So the opposite of what people thought would happen happened. They were like, let's get it out of the country completely and let's embrace this digital yuan. Now, if they had done the other thing and recognized that the inevitable future is these private alternative currencies, it is, these decentralized networks, then they might have been able to set themselves up better for the future. Instead, I think that all these governments are being backed into a corner right now. They're all betting on the wrong horse. Rather than embracing this technology and positioning themselves in a way that could benefit from this inevitable rise that we know is happening, they're saying, let's try and put as many regulations as possible and let's double down on central bank digital currencies. I think that they were positions to really have a good go at kind of being this dominant player, and they've lost that now. So it's just very interesting, this turn of events, and the rest of the world's kind of benefited because all of the mining left China. But I'll throw it to you, Ben. What's your thought on all of this?
I think this is really, really interesting. The internationalization aspect of this is huge, right? Because all the concerns that we've had and we've articulated, not around just CBDCs, but particularly the digital yuan and what digital currencies could mean in the hands of a centralized government, now expand that across the world, potentially, if you're using this or people are going to be trafficking in it, in mobile payments, which are becoming increasingly popular. Like, that's a really big deal. And I think it also shows, like, the value that China's placing on this and also the speed with which they are moving. Like, this is happening really, really, really fast. And like, the rails are being laid at speeds that are going to, far eclipse what the EU or the US or anybody else, for that matter, is doing in this space at the moment. So we're getting a crash course in real time here, but the brakes are not being placed. It just seems to be accelerating. Can we also pour some out for Chinese gamers? There was a simultaneous report today that China's going to mandate only 3 hours of video games a day for its citizens. And I just, that's on top of that, and thinking also, in that regard, right, we're looking at, my gosh, what is it? But in the Philippines, there's like blockchain-based video games being used to like get digital currencies. And, that's cutting off a whole market for like Axie, thank you. Axie Infinity. And so, there's cutting off a whole market of that and removing a whole potential for, other ways of acquiring digital currencies simultaneously. So those two stories, I think this one's really interesting, but also that was another one that came out today that just has huge ramifications, for individuals, but also for like blockchain-based gaming going forward in the country.
No, I think you're totally right there. And pour one out for the gamers. I think I do sniff a Michael Casey op-ed coming out this weekend on this particular story. I'm actually interested to see what he's going to write about it, because he's been kind of tracking this narrative for a few years now about like the dollar reserve status. So I do want to not necessarily like push back on some comments about, I think things are going to get a little bit more interesting than we may think. I think that there is some validity to the CBDC argument, especially with how China is rolling it out and the ways that they're going to like use it against their own population. If exporting their like currency against the dollar works out, it depends on if people are going to use it. But they do have a lot of economic incentives to make people use it. But Naomi, I'll respond real quick there.
Yeah, I just think that it's really interesting bringing up the gaming stuff that's going on. Like, they're increasingly totalitarian. A lot of people thought that, maybe they'd start to open up their market more, and now they're just doubling down in the opposite direction. And there is going to be pushback. People have the technological tools now to circumvent that kind of centralized power. Technology really is helping us by providing these decentralized alternatives. And so I just wonder, how long all this is going to last. These governments can cling onto power for an exceptionally long time, probably longer than we would expect. But eventually, this is all going to come tumbling down. But let's change track here, Ben. I'm going to throw to you for the next story. What's going on with Solana?
Sol, why you so high? That is the question. So programmable blockchain Solana's Sol token crossed the triple figure mark on Monday, drawing a 3-figure price for the first time. And it is now the ranked 8th largest crypto by market cap, which is absolutely wild, but also tracks with the frothy nature of DeFi and NFTs. So, Will, as our resident DGen, I want your first thoughts on this one.
I've kind of hung up the DGen cloak for a little bit, though. I need to get back into it.
Dust it off. Put it back on,
Yeah.
I
love DGen, Will.
To keep track of this stuff. I love the DGen stuff. It's
really
probably it's more fun than NFTs, in my opinion, which that has also turned into like this whole degenerate ecosystem as well. The thing that sticks out to me, and I should have found this quote and pulled it up earlier, is Sam Bankman-Fried back in like 2018 when Sol first was coming out. It had been out for about a year at least before as a token, but he started betting on it and buying more and more and more of it. And now look at it, it's $100 a token. Like, it's just incredible to see the foresight that we have from some people who are in the ecosystem who know what to buy and where to buy it. And then years later, you see $100 price valuation on a token like Sol, which is a competitor to an Ethereum. And no one thought Ethereum really had any competitors. I thought there was a huge moat around Vitalik's project. So that's my takeaway, is that there's people in this industry who are just so good at calling the shots. It's just wild to see. Jen, I'm going to toss it to you.
Yeah, we should be listening to people like SBF and not billionaires who made their billions years ago and are just not wanting to understand the future. But I wanted to talk about a video that Solana tweeted on Friday that indicated that there could be a token burn coming up. It's just I don't know if you guys clicked on it, but it's just a lighter flickering. So I clicked on it, and it takes you to a page that says, the sky's the limit. What will you launch? And so this had me thinking that they're doing something on Friday. And I really hope that it's another NFT project. I know, Ben, that you're going to roll your eyes at me, but I hope that that's what it is. And that's what we're building up to here.
Can I interject
also
really quick?
Speculation about, go take it.
Apparently, and this brings up an old standing feud between Naomi and I, so it's probably not wise of me to do it. But voice.com has now pivoted to an NFT website. Which
we've talked about that on the show before, Will. Where
did
have
we
you
talk
been?
about that already?
Yeah,
we talked about that at length.
A while ago.
We all know. We all know.
All right. So away from that breaking news, back to Will, tell us how you really feel and what you're thinking about late into the night. But no, this is a sort of speculation around Solana's impending ignition upgrade, in which there's some social media chatter that there could be additional token burning mechanisms or liquidity mining incentives, and that's sort of what maybe has pushed this price point. But Will, back to your point briefly, and then Naomi, I'm going to toss to you. We talk about FTX or Sam Bankman-Fried like buying up Sol tokens, right? FTX and Sam Bankman-Fried are also putting a lot of projects here, right? They're like driving a lot of the development of this space. So we talk about like buying up tokens early in the foresight. It also helps to have a huge exchange behind your back and be able to throw millions at the project or that the blockchain network itself to launch various projects, DEXs like DeFi protocols, etc. But Naomi, over to you.
Yeah, I think in that, that's spot on, Ben, that these people aren't just getting lucky. These people are building the ecosystem that they're then benefiting from. The same thing kind of happened from Ethereum when you had Consensus and you had Joseph Lubin just pouring money into, developing projects based on Ethereum. And now, you have other people doing similar things on other blockchains. I think it's the smart play. That's absolutely what these people should be doing, is try to build that up, encourage people to go over there. We talked in the last episode about all the incentive programs for people to move over to like Avalanche and things like that in DeFi space. There's another incentive program. I can't remember which chain it's on, but like lots of them going on right now where people are just trying to say like build up projects on this network, and that's how they're going to popularize those networks. But it brings up the old question that we bring up on the show frequently about the future of Ethereum and its competitors and who's going to win out in the end, because Ethereum really does have that first mover advantage because they got all those players to build on them on the outset. All these people have sunk costs into building on Ethereum, and then you start to have all of this scaling issues and everything's very expensive there, and a lot of these projects just didn't become viable because of the expense around it. And now you have all these competitors springing up. Solana is doing incredibly. They've literally pitched themselves as, we are the alternative to Ethereum. And it's not, one of the second layer scaling solutions that they're building on Ethereum. We are something that does this on the base layer, which means that everything's going to be compatible. Everyone who builds on Solana, whereas it's not clear that that's going to be the same thing with these different scaling solutions on Ethereum. If different people are using different layer 2 solutions, it's going to require more integration to have them talk to each other and all of that. And so you have lots of different protocols really vying for that throne that Ethereum now has. And you got Tezos vying for it as well. You got Binance Smart Chain. You've got lots of different projects. So I don't know. I don't know what's going to happen here and whether Ethereum is going to get to proof of stake in time, whether they're going to fix all their scaling in time, or if they're just going to lose a lot of market share and people are going to start betting on different horses. But Will, I'll throw to you for your thoughts. What's your prediction there?
I'm sorry for wasting your guys' time on the EOS story. I just got really hyped.
Well, don't apologize. I feel so sad for telling you now.
On the show.
I wanted to bring up some fire this morning, just to instigate something. In terms of Solana, Ethereum, it's also interesting. Cardano is really pumping recently, which is interesting. And they've had some new stuff come up, some new projects come up on their platform, launching smart contracts and whatnot. It's always kicked around as a meme coin of the smart contracts. And I'm not going to get into that, but I think it's just worthy to say that there is a lot of pressure on Ethereum right now. And I think that I'm wondering how that pressure affects the developer roadmap. In my experience reporting on Ethereum, it really hasn't changed things too much. Ethereum has executed very well over the last year and a half in terms of launching ETH 2.0. That network is live, and it's probably going to kind of become one with this merge by Q1, Q2 of next year. And these projects just take a lot of time. I think like we're looking at like this really tiny micro economy right now. In 5 years, we'll be having a very different discussion. I think there will be multiple chains, but Ethereum is still going to be top dog.
I was going to say, does it have to be a winner take all? That's kind of my question, right? Like as we saw with like crypto generally, it was not like there are so many coins out there. And I think that, you know, we're just going to have like network optionality and kind of the multi-chain future we talk about, as opposed to like the ETH killer conversation that has been happening for years and not really gained the traction until maybe at this moment. So that might be the way that we look at going forward. But Jen, I want to toss this to you for the next story.
All right. Jack Dorsey is building a decentralized Bitcoin exchange through Square's new division, TBD. So Mike Brock, he's leading the initiative, and he tweeted a few different tweets on Friday. I've summarized them for all of us. Basically, what he said was, "You're welcome. We believe Bitcoin will be the native currency of the internet," he added that the focus is solely on a sound global monetary system. Then he went on to say that getting Bitcoin today typically involves exchanging fiat as a centralized custodial service like Cash App or Coinbase. And these on and off ramps to Bitcoin have a number of issues and aren't distributed evenly around the world. This is the problem that they are going to solve. They want to make it easy to fund a non-custodial wallet anywhere in the world. And he added that you can think of this as a decentralized exchange for fiat. So I think this is very cool. I think it kind of puts together the little tidbits of information we've been getting from Jack Dorsey and his team over the past few months. It's all starting to make sense now, and we're starting to see how they're thinking about things behind the scenes. And now they have a single problem that they are solving at TBD. Will, I'm going to throw it right down to you, a decentralized Bitcoin exchange with Jack Dorsey at the helm. What are your thoughts?
I have a lot. And just to be clear, I've not formulated my final opinion on the subject. I do think that figuring out a way to do decentralized stable coins remains probably the biggest issue within the cryptocurrency industry. There's a lot of great alternatives. Like I think DAI is great, but also it's backed by 50% stable coins that can be shut down by a regulator. You have other things like RAI, which no one really knows about yet, but are decentralized stablecoins. And then you have all these like algorithmic attempts as well. And I think that's an important aspect of what Square is trying to do with this, or at least Jack Dorsey is trying to do with this new project, is allow for anyone to get Bitcoin through a decentralized platform. And that would include the need to move through some sort of decentralized fiat alternative that is pegged to fiat. I don't think it's been done well yet. And I think that's still something that's going to happen over the next decade. Andre Cronje of Yuan Finance has also been working on a similar project, but on the Ethereum ecosystem, which of course is a whole other aspect of this conversation. Like Ethereum has been building this stuff for years, and now Bitcoin's trying to do it. Vitalik saw this problem, and so he created a whole new blockchain ecosystem. Bitcoin tried in the early days, kind of gave up on it, and now seems to be returning to this narrative. Which again is really interesting and kind of gives some fuel to the Ethereum maximalist ideas, I guess. But Ben, I want to hear your take on everything here.
I'm still formulating it too. I really don't have a whole lot to say because this is still like reading through these tweets, right? Like Jen, thank you for summarizing them, but there is just a lot to unpack that even I don't fully get in this regard. So Naomi, I'm handing it off to you.
Yeah, I want to dig into some of the stuff that's not said because I have so many questions about this. When they say that they are building a decentralized exchange for fiat, because I was wondering when they first of all, let's take a step back. I think that this is absolutely necessary. This is the area we need to focus on because the on and off ramps into Bitcoin are completely centralized. They're completely KYC. They're completely controlled. They're completely censorable. And that is a huge problem that we need to fix if we want Bitcoin to be truly uncensorable and decentralized. And when you have 99.99% of all native Bitcoin trading happening on completely centralized exchanges currently, that's an issue, right? So DEXs are a huge part of our future, but those on and on ramps areas that we haven't found solutions for. So if he's putting a ton of resources in terms of like, smart people and money and all of that towards fixing this, awesome. Hats off. That's what we need. Also, I don't understand how they're going to do it, right? So if we look at the options out there right now for on and off ramps, I don't think they do either. The on and off ramps into Bitcoin via fiat, I mean, basically we have BISC. And that's really the only decentralized option. And it's a very interesting protocol, but there's a reason why you've had like at least 2 different teams fork the BISC protocol and had it, one based on Ethereum, one based on Monero. It's because Bitcoin is incredibly expensive. And when you have every exchange just costing a ton of money and already you're paying a huge premium to use the BISC network, it's just there's no liquidity on there because you need in their system 4 on-chain transactions in order to make a decentralized exchange. You need to lock up the money. You need to, talk to each other. You need to unlock the money. You need to transfer it. So when you're paying like a different Bitcoin transaction fee for every one of those, that's huge. And they clearly recognize this because Brock said gaps around cost and scalability are needed and a solve for exchange infrastructure between digital assets like stablecoins. Like there are lots of areas that need to be solved for this to work. Hopefully, if they put a bunch of resources towards it, they can figure this out because it really is needed. And hats off to BISC for being the one alternative out there. Even though it is expensive, there are people who desperately need this stuff and are willing to pay that premium. So hats off to them for providing a valuable service. And to all the other, coins that are experimenting in this as well. But it's definitely the problem area we need to focus on.
Yeah, I'm with you, Naomi. I think there are a lot of things to solve. I don't know how they're going to solve it, but at least they have the resources to put some intelligent people behind the problems, and we'll see what they come up with.
Absolutely. All right, everyone. Wait. I just heard something.
Did you have something to say, Will?
Will, did you have something else? No. All right, guys. We're going to
doesn't really want to say anything there.
Did we upset you? Wait.
We upset him. That's what happens when he takes so much time off. All right, everyone. We're wrapping the show. This is Monday. We're ignoring the voice.com stuff. We'll bring that up in another episode. They
pivoted to an NFT platform. That's hilarious.
No, I think it's pretty
It happened
it's pretty
so
funny.
long ago, Will.
I don't know why I didn't see it.
Then that's the note I think to wind it down on today.
Guys, you guys, rapping you guys, I don't know how Zack does it because you guys are just like, let's keep talking about all the things. All right, but we're ending it there. Thanks for joining. Stick around if you want to hear more about Bitcoin stuff. At 3 p.m., we have another show on CoinDesk TV. Tomorrow, show at 9 a.m. And then join us back here at 12 for the hash every single day. Thanks for hanging out with us and see you tomorrow, everyone.
Bye.